Okay, so money and credit. This is the chapter we're doing. What is money and credit? क्या money क्या है बताओ? What is money?
It is a medium of exchange for goods.
Okay, if you want to buy something, you need money, and money is, as you said, is a medium for
Exchange of goods.
exchange of goods. So it is a common medium. Common medium का मतलब है कि जैसे पहले जो barter system होता था. If I want, say, a cup of coffee, and you want cookies, then if you have coffee and I have cookies, then we can have some kind of an exchange. Yes, which is called double coincidence of wants. Means you should have the same stuff that I want, and I should have the stuff that you want. If I want coffee and you have cola, I don't want cola. I have cookies, you want cookies, but I cannot give you cookies because you cannot give me coffee. So double coincidence is not there. Huh, Myra? समझ में आ रहा है? Okay, so double coincidence is not happening. Okay.
In what? In money, right?
Yes, needs basically, needs and wants. Double coincidence of want. My want is coffee.
Yes,
Your want is cookie.
नहीं तो वही मैं कह रहा हूँ ना, due to money this has been eliminated.
Yes, so money, yes, we will come to that. So let us start this thing, money as a medium of exchange. It is a medium of exchange, means if you want to exchange something, both the people should have, you should have money to buy something that, so you will give money and exchange it with the good that you want. We'll go through the chapter very closely. The use of money spans a very large part of everyday life. Look around you and you would easily be able to identify several transactions involving money in any single day. So we have so many transactions every day. Well, these days the lockdown is there, so not much is happening in the sense that we are not going out every day.
Online banking is also some money.
Yes, we will come. So can you make a list of these? So can you think of any money transactions, any things that you have bought of late?
Xbox,
bought
Call of Duty.
Okay. Yes. What did you pay money for lately? Did you pay money for anything? To buy something?
Me?
In the past 1 week or 1 month?
Probably not.
कुछ नहीं लिया तुमने? Nothing.
Really?
कुछ भी चिप्स कहाँ से आए?
No. वो तो बीए के पैसे थे, मेरे नहीं थे.
ठीक है भी, whoever.
तो मतलब Xbox मैंने खुद के मनी से लिया.
Okay, fine. Listen to me. Okay, you bought chips, you bought potato chips, and Rayan bought some game, and I bought some grocery. So these are the things that we have spent money on, which means that we have spent money to get these things. So transaction has happened, an exchange has happened. So in many of these transactions, goods are being bought and sold with the use of money. So we are buying goods and using money to buy that. In some of these transactions, services are being exchanged with money. Services. What kind of services? Internet is one, or haircut, or going to a hospital, seeing a doctor, taking an aeroplane to go from one place to the other, going to a hotel or restaurant. So all these are services. So we not only use money to buy goods, we also use money for availing services from other people. For some, there might not be any actual transfer of money taking place, but a promise to pay money later. So many a times we are taking something, but we are not paying the money at that time. We are saying we're just making a promise that, okay, we are going to pay the money in future, right?
Like a loan.
It could be a loan, okay? Okay, yes, it could be a loan. It could be some kind of a service. Someone comes,
insurance.
Like for example, we have maid coming to our house, and she does the dishes, she cleans the house, she does all these things, and then we say, okay, we are going to give you money at the end of the month. We go to the college, we teach students, and the college gives us salary at the end of the month, right? In terms of farmers, they go to a bank, they say, okay, please give us some money. The season is starting, we have to buy seeds, we have to buy fertilizer, this, that, but we don't have money for that. So the bank will give them loan, and the farmer will go and use that money to buy the seeds and fertilizer and tools and all those things. And then uh, he's going to do farming, and when the harvest is there, he's going to sell off the grains and earn money from that, and then repay. So what is happening when he is going to the bank? He is making a promise: I'm going to pay you back the money. Okay, Mara, are you getting me?
Hmm.
So wherever you don't understand something, please stop and ask. So have you
Okay.
ever wondered why transactions are made in money? The real reason is simple. A person holding money can easily exchange it for any commodity or service that he or she might want. Okay, so if we want any commodity or a service, then we can use money to buy that, right? So thus everyone prefers to receive payment in money and then exchange the money for things that they want. So take the case of a shoe manufacturer. He wants to sell shoes. This guy is sitting here. He wants to sell shoes in the market and buy wheat. The shoe manufacturer will first exchange shoes that he has produced for money and then exchange the money for wheat. So if he wants, if there's a shoemaker, he wants to buy wheat, he will first sell off the shoes that he has made, and with the money he is going to buy the wheat. So imagine how much more difficult it would be if the shoe manufacturer had to directly exchange shoes for wheat. If the money was not there and he wanted to buy wheat, but the money, the medium is not there. Directly, if he had to exchange shoes for wheat without the use of. So if he did not have money, how could he buy wheat without the use of money? Can you tell me?
Find someone who wants shoes and has wheat and then exchange.
Right. Okay, Myra? So
Barter system.
yes, if he doesn't have money, then he needs to buy someone who has wheat, and that only finding someone with wheat is not enough. That person who has wheat should also want shoes in exchange, right? So like you here, you see this guy is selling shoes, this guy is selling wheat, and this guy is selling
Pots.
pots. So the shoemaker, he's saying, I'll give you shoes for your wheat. The person who has wheat, he's saying, sorry, I don't need shoes, I need clothes. If you have clothes, I'll give you wheat. He says, no, I don't have clothes. He says, sorry, transaction cannot happen. Now here is another guy. He's selling pottery, and he says, I want shoes, but I don't have wheat. So this guy has shoes, and the pottery maker needs shoes, but the shoemaker doesn't need pottery, he needs wheat. So this transaction cannot happen. Okay, this barter system cannot happen. This barter cannot happen. So he would have to look for a wheat growing farmer who not only wants to sell wheat but also wants to buy the shoes in exchange. That is, both parties have to agree to sell and buy each other's commodities. So when both the parties have things that the other person wants, and both of them agree to sell and buy each other's commodities, it is called double coincidence of wants, right? Shoemaker wants wheat, and wheat seller wants shoes. So there's a double coincidence. What a person desires to sell is exactly what the other wishes to buy. In a barter system where goods are directly exchanged without the use of money, double coincidence of want is an essential feature. So barter system can happen only when there is what?
Double coincidence of wants.
Yes. Why, Myra, why is it important that a double coincidence of want should be there?
Because if someone has shoes to sell but wants wheat in exchange, and if the other person don't have wheat, but he or she also wants the shoes, then it cannot happen because both the needs have to be satisfied.
Right. But if there is a third thing in between, which is money, that both of them have, do we still require double coincidence of want?
Hmm.
Hmm?
No, I don't think so.
Yes, we don't need double coincidence of want then, because money is there and both of them need money and they can use money for buying whatever they want. So money makes solves this problem. So if double coincidence is not there, it's not a problem. So in a barter system where goods are directly exchanged without the use of money, double coincidence of want is an essential feature. In contrast, in an economy where money is in use, money, by providing the crucial intermediate step, eliminates the need for double coincidence of want. Money provides the intermediate step, which is that double coincidence doesn't have to be there. Okay. It is no longer necessary for the shoe manufacturer to look for a farmer who will buy his shoes and at the same time sell him the wheat, right?
Yes.
Well, yes. So all he has to do is find a buyer for his shoes. So once he finds a buyer for his shoes, then the buyer is going to give him money, and then he can use that money to go and buy wheat and give money. Okay. So once he has exchanged his shoes for money, he can purchase wheat or any other commodity in the market. Since money acts as an intermediate in the exchange process, it is called a medium of exchange. Medium of exchange, right? What is exchange?
Exchange is the trading of goods between two or more parties.
Yes, medium. And the medium is?
The platform where this exchange takes place.
Yes, something which will help in transferring, right? Like voice and sound needs a medium, which is air, right? Electricity needs a medium, which is metal, right? So goods, they also need for goods for exchanging. I'm giving you coffee, you this thing. If I want to buy coffee, I can go to a coffee shop. So a medium is required. And what is that medium? Yes, what is that medium, Myra?
Money.
Money, yes, exactly. So money provides a medium which helps in exchange of goods. Okay. So here are some questions. What does it say? How does the use of money make it easier to exchange things? Right. Well, it provides a medium.
No, that, and also it eliminates double coincidence of wants. Thus,
Yes.
you don't have to. You're not restricted to whoever you want to buy or sell from.
Cool. And can you think of some examples of goods, services being exchanged or wages being paid through barter?
For example, on rural areas, many times when the richer farmers employ unemployed farmers or landless laborers, instead of paying them with money, they pay them either with grains or with other food items which they need because they don't have enough food.
Yeah. Yeah. Also, sometimes when farmers don't have money to repay the land owners, they say, okay, we are going to work for you for the next 1 year.
Yes.
So they are working there without and exchange of goods, like they're in barter. You need cookies and someone else needs chocolates. So he can give you cookies and you can give chocolate.
Yes. They're asking for examples, modern examples.
Okay. So modern forms of money. Other forms of money. So early punch marked coins, here you can see they may be around 2,500 years old, punch marks. Sometimes they would have the face of the king, the Gupta coins, and Tughlaq coins, and gold mohr from Akbar's
Oh
reign.
wow, that looks really nice.
Right. And this is the modern coin. So something is embossed on it, some picture,
Something, yeah.
of the picture of the king or the name of the place, or
Something that marks it as a
Right.
currency.
makes it official. So we have seen that money is something that can act as a medium of exchange in transactions, right? Before the introduction of coins, a variety of objects was used as money. example, since the very early ages, Indians used grains and cattle as money. Thereafter came the use of metallic coins, gold, silver, copper coins, and a phase which continued well into the last century. So earlier people were using grains and cattle
Grains
as
and
money.
cattle.
Yeah, what is it? Yeah, earlier people were using grains and cattle as money, and later on they started using gold, silver, copper, and coins. A phase. Oh, okay. So these things were used as money before.
Surprised they use copper.
Yeah. So currency in the modern form of money include currency, paper notes, and coins. Right. Unlike the things that were used as money earlier, modern currency is not made of precious metals such as gold, silver, and copper. So earlier, when people were exchanging coins, they had some value. They were precious metal. Okay. But now paper, this paper money, it
It's
just doesn't have.
solely, yeah, it's solely for the purpose of exchange of goods. It doesn't, you can't do anything else with it. Like it's useless unless
Yes, it's not a valuable thing.
Yeah.
It is it's bought on its face value.
Yeah.
Right. So it doesn't have an intrinsic value like gold would have some
yeah,
value, right?
like you can melt down gold coins
Right.
and sell gold. Like
Right.
can't really.
So then why is it accepted? So why, when money doesn't have its own value, then why is it accepted as a medium of exchange? It is accepted as medium of exchange because the currency is authorized by the government of India,
Or the,
right? Government of India or the government of a country. So in India, the Reserve Bank of India issues currency notes on behalf of the central government. Now, Reserve Bank of India, it was established even before the independence in 1947. So Reserve Bank of India was established on April 1, 1935, and it is, it regulates the monetary system
Yes.
in India, and on the behalf of the government of India, which is the central government, it issues currency notes. So currency notes are sent to the banks, and banks, you can bank you can then
Get
then companies can get their withdraw money from the bank and give salaries to people, and people extra money they can put back in the bank. So Reserve Bank of India its job is to issue the currency notes on behalf of the central government. As per the Indian laws, no other individual other than the Reserve Bank of India or organization is allowed to issue currency. So, and also the law legalizes the use of rupee as a medium of payment that cannot be refused. Okay. So if someone, if you want to go and buy something and you're giving rupees to buy that, that person cannot refuse to accept it. He cannot say, "Oh, I want dollars." Yeah.
to change.
Yeah. So no individuals in India can legally refuse a payment made in rupees. So it is a law, I mean, that you have to accept money for transactions, as the rupee is widely accepted as a medium of exchange. Now, so a modern currency, modern form of money, one is, so rupees and paper notes and coins, they are modern forms of money. Yes. What else is currency? Deposits in bank. Deposits in bank. The other form in which people hold money is as deposits with bank. At a point of time, people need only some currency for their day-to-day needs. So when people get salary in the first week, they have a lot of money, so they don't want to hold all the money with them. They will put the rest of it in the bank. The other way is that salaries are straight away sent to the bank, and we withdraw some part of it every week as per our requirement. So for instance, workers who receive their salaries at the end of each month have extra cash in the beginning of the month. What do people do with extra cash? They deposit it in the bank by opening a bank account in their name. Banks accept the deposits and also pay an amount as interest on deposits. So Why people put their money in the bank?
To safeguard it, to keep it for later.
Okay. So
Yeah.
if you're keeping a lot of cash with you at home, it is not safe, because if you are away and a burglar breaks in, he can, walk away with all the money. So one is that your money is safe with the banks. Banks are accountable for taking care of your this thing. And secondly, what is the other advantage of putting your money in the bank?
You get interest, so
Yes.
the value of or the amount of money you put increases.
Yes. So the banks say, if you put money with us, we are going to give you some interest on it. Okay, 4%, 5%, whatever they know. Yes. So interest on deposits is a way, is a kind of a lure, or is a kind of a an
Incentive for
incentive that banks give to people to keep their money with the banks. In this way, people's money is safe with the banks, and it earns an amount as interest. So people also have the provision to withdraw the money as and when they require.
Like the ATM, whenever we want money, we just put in our credit card to change.
Yes, in the ATM, you can go and withdraw the money whenever you want. Since the deposits in the bank accounts can be withdrawn on demand, these deposits are called demand deposits. Right? So the deposits in the bank accounts can be withdrawn on demand. So you are putting your deposit in the bank, and you can withdraw it whenever you demand, whenever you want. That is why we call it demand deposits. Mhm. Okay, if you want to buy a gaming PC, yes, all that money is not there in home. You have to go and withdraw some extra money from the bank. Okay, so demand deposits. So what are the three types of currencies we have studied so far? I mean, currency means yes,
types
money.
of exchange. So we've studied coins. We've studied the modern system with its coins and
Notes.
notes. We've studied the barter system, and we've studied the early days
No,
where
no.
they used grain and cattle.
So demand deposits.
That's
Currency.
not a form of currency. That's like a symbol.
This is a form of money.
I see. Okay.
Currency is a form of money, which is paper note and coins. The second form of money is deposits with the bank, or we also call it as
Demand deposits.
Demand deposit.
demand deposits. Yes, this is the other form of money.
I see.
It's a form of money. If your money is in the bank,
So the money would be
that deposit is money.
I see. Okay. Oh yeah. Okay. Okay.
That deposit is money. You can withdraw it in the form of notes and currencies,
Yes.
and also you can transfer it digitally to some other person without withdrawing it.
Yeah.
It is money.
Okay.
Someone says, okay, can you transfer so much money to my account?
Yeah.
I'll repay you later, or I'm sending you this. Amazon says, I'm sending you these books, so you have to transfer the money. So you don't withdraw anything. You use your bank account or credit card. So that is a form of money.
I see.
So two forms of money we have studied so far. Number one is
Like notes and coins.
notes and coins,
Currency.
and number two is
Demand deposits.
demand deposit. Correct. All right. So demand deposits offer other interesting facility. It is the facility which lends it the essential characteristic of money, that of a medium of exchange. Okay. You would have heard of payments being made by check instead of cash. So here is a check. Okay. Have you seen a checkbook? Have you seen a checkbook?
Yeah.
Okay. Okay. Checkbook. This is a check. So a check is this thing, this from the white border, the top and bottom. This is a check. Something else is written also. So what is a check? For payment through check, the payer who has an account with the bank makes out a check for a specific amount. Like for example, here it is 57,000 rupees.
A lot of money.
57,000 rupees. rupees. So whatever the money that you want to give to the person, you write that amount there in digits as well as in words.
Words, and you have to include only just to specify, right?
Right. Yeah. Because so that no one will add a zero here or one here. Yes, you just write only. Now, a check is a paper instructing the bank to pay a specific amount from the person's account to the person in whose name the check has been issued. So a check is a paper which tells the bank, excuse me, I have so much money in I have a deposit with you, I have a demand deposit with you, and I want to transfer this amount of money to Myra, 57,000 rupees, and please give it from my account to her. So if she has that check, this check she has the authority of showing that check and withdrawing the money. Now here we see a few things in this check. You see, what is the check? Number one, pay. It says pay whom? Pay Prem Kumar. Or bearer, ya dharak ko. Dharak is the person who is holding the check. Okay, so it is Prem Kumar or the bearer. Prem Kumar, maybe Prem Kumar is not going himself.
Yeah, maybe he sends like his wife or something.
He sends his wife or a friend to withdraw the money. So either Prem Kumar can go and get it himself, or he can get, or the person who has taken the check can get it. 57,000 rupees only. So the date is there. It should be clearly written. If there is any overwriting or cutting, they reject the check. They don't. And here is an account number, the bank account number of the person from whom the money is to be taken out and given in cash to the person. Okay, and this is Bharatiya State Bank or State Bank of India, and this is the address, bank branch address, branch code, and its address is given here, and this is check number, and this is the code that is used by the banks. Okay, any other question about this?
No.
But you see there is something.
Yeah.
Yes.
I have one.
Yes.
Like if Prem Kumar is not giving the check, someone else is giving the check, still his name would be written in the bearer or the pay.
No. For example, Rayyan says give 57,000 rupees to Myra. Okay. And Myra says, Ashar, can you go to the bank and get this money for me? So I will take the check from you and go to the bank, and the bank can give to me beer. But if you cross it, which is account payee, you see this thing is written here, account payee. It means that it can only go to Prem Kumar's account. The bearer, for example, if I'm taking it and I drop it on the way, I lose it, and someone else finds it, he cannot, get the money, because you can cut this thing bearer, and if you have crossed it and written account payee, one is a payer, so Rayyan is a payer, and payee is the person who is getting the money, like interviewer, interviewee.
Yes.
Right. So payee is the person, is Myra, who is getting the money, and if Rayyan writes account payee, means that it can be put in Myra's account only. So Rayyan is going to go to the bank and deposit the check, and the bank will say, okay, thank you so much, Mr. Rayyan, you can go back, and we will transfer this money. Mr. Ashar, thank you so much for your check. We're going to transfer this money from Rayyan's account to Myra's account.
So this basically is a safeguard against someone else stealing your check and putting the money into their account.
Exactly. Sometimes when you want it instantly, then you do not cross the check. If you want to say, yeah, I want 10,000 rupees now, then you write, and you cannot go to the ATM, and you're busy in the office, you have a meeting, you write a check, and you write the name of Ashar Khan, and Ashar Khan can gladly go and get the money and have fun. Okay, so this is the check. So do you understand everything about the check?
Yes.
Yeah.
Let us try and understand how check payments are made and realized with an example. So here is an example given. A shoe manufacturer, Muhammad Salim or M. Salim, has to make a payment to the leather supplier, and writes a check for a specific amount. So leather supplier है Prem Kumar, उसके लिए he has to make a payment to the leather supplier. Salim is a shoemaker, and he is taking leather from Prem Kumar. This means that the shoe manufacturer instructs his bank to pay this amount to the leather supplier. The leather supplier takes this check, and Prem Kumar takes this check and deposits it in his own account in the bank. Okay, the money is transferred from one bank account to another bank account in a couple of days. The transaction is complete without any payment in cash.
Yeah.
So Prem Kumar gets this money in his account.
Yes.
Thus, we see that demand deposits share the essential features of money. Okay, so like rupee and coins, the check is working
Yes.
just like that.
It's also a means of
Yes.
exchange.
It's
It's also
also-
a form of money.
It's a form of money. So demand deposit also has the same features as money has. So you can do everything with the demand deposit that you can do with rupee and coins.
Yeah.
Right. So the facility of checks against demand deposits makes it possible to directly settle payments without the use of cash. Since demand deposits are accepted widely as a means of payment along with currency, they constitute money in the modern economy. Right? You understand this? Aaron? Okay, because you can use the demand deposits, they are also accepted as means of payment, because in a demand deposit you can use a check, you can do wire transfer electronically. So demand deposit is also a form of money in the modern economy. Okay, you must remember the role. Okay, you must remember the role that the banks play here. But for the banks, there would be, so the banks play the role of doing the transfers and all. So here are some questions. M. Salim wants to withdraw 20,000 in cash for making payments. He would write a check to withdraw. How would he write a check to withdraw the money? Okay, now here Salim wants to withdraw. Salim wants to withdraw 20,000 in cash for making payments. Earlier, he had to give it to Prem Kumar, who was a leather supplier. Now he wants to withdraw. What will he do? How would he write the check to withdraw money?
Can he write his own account name?
He can write M. Salim, okay, pay M. Salim, or he can also write self.
I see.
SELF. In place of Prem Kumar, he will write either he will write pay M. Salim, or he will write self.
I see.
Okay, so this is one way of withdrawing. But okay, I'll just tell you something else also. So a checkbook has only a number of checks.
Yes.
And then you have to write to the bank to send another check. So the checkbook. So either you have to go and collect the checkbook, or you have. So they have these payment slips also in the bank. Payment slip is a very thin paper. You can take that slip and write on that your details and everything, and go to the counter and give that slip. So that person is going to match your signature with your records in his computer and see, okay, because you have to sign this. If your signature matches, then he will give you the cash. That way you are not wasting your checks, because you are yourself there, and you can use your checks for later, because it is something which can be used officially.
So the payment slips are provided by the bank.
Payment slips are lying there. You can anytime go and look for, because in that area when you go to a bank, there's this. You can just those staple things there. You can tear one off and write that, and it has two parts. One part you keep with yourself. The other part you give to the person sitting in the window. So Myra, Salim will in place of Prem Kumar, he is going to write his name, or like here, so will write his name, Salim, or he will write self. Self, right? Okay.
And then he'll write the amount.
Yeah, he will write the amount.
Words and numbers, and
Yes.
then he will sign it.
Right. his account number is already there. But if he's
Yes.
paying by the slip, slips are blank. You'll have to write your account number. Okay. Now take the correct answer. After the transaction between Salim and Prem, Salim's balance in the bank account increases and Prem's balance increases.
False.
So if
Yeah,
Salim,
that's not true.
that's not, yes, because Salim is giving, so his balance will go down. Salim's balance in the bank account decreases and Prem's balance
Yeah, that's
increases.
Hmm.
Okay.
That's true.
Salim's balance in his bank account increases and Prem's balance decreases. God.
I
Right.
that.
Number 3, why are demand deposits considered as money?
Because they have all the features and can accomplish everything that physical currency can.
Yeah. So, rupee and coins you pay to exchange to get
Yes.
something, but demand deposit also you can pay a check through a check, or you can through electronically you can transfer using a demand deposit, because
Yes.
you have deposited the money. It does everything that the hard cash can do for you. So, it is considered as money. Okay. So now we come to
One second.
yeah.
थोड़ा सा आपका नहीं आ रहा है इसलिए.
Now, loan activities of banks. Now, money we have seen how we can buy stuff, and when we have money, we can buy stuff, we can buy services, we can buy goods, we can buy leather, we can buy a whole lot of things that we want. But what when you don't have money? Then you can take loans, right? Loan activities of banks. So banks play a very big role in giving loans. Let us take the story of banks further. What do the banks do with the deposits which they accept from the public? Now, when we get the salary, the excess amount we put in the bank for two reasons. One is that yes, we want to safeguard our money, that it doesn't get stolen. Banks will take care of it. They always have big lockers and metal doors, and they have fire alarms. They have
Security.
armed security guards there. Whole lot of people that are taking care of your money inside the bank. So one is that bank is a safe place to keep money. All right. Number 2 is that you are getting interest on money. So what do the banks do with our money?
Yes.
What banks do is that, if you deposit if you deposit 100 rupees in your bank, the bank is going to keep 15 rupees with itself, and give 85 rupees as loan to others who need it. Why do you think people need loan, Myra? What do you think people
Because
need loan for?
because they don't have the money, that's why they need the loan from the bank
Many
Yeah.
times.
to buy something.
Farmers,
Farmers.
students who want to study and they don't have money to pay the fees, they take loan, and when they get a job, they pay it back. Student loans are a very big business.
It's a very big problem as well. Debt is an
Hmm.
incredible problem.
Yes.
Also, many times not only people who don't have money, they take money because they don't have enough money as of now. For example, you don't have the amount of money that you need to purchase. But I mean, you have money, but you borrow more. And then
Yeah,
you pay
I mean, if you want to buy a house, is very expensive. If you want to buy a car, if you want to buy TV, stuff like that, then you can take the money from the bank.
Yeah.
Now, so is that you need loan. So what will the bank say? Bank will say, excuse me, and you say, okay, I have 20,000 rupees in your bank, but I need 40,000 rupees to buy a house now, and I will pay you every month some amount as I get my salary. So over a period of 1 year, I will pay you, say, 2,000 rupees per month, and my money will paid off. So you will say, yes, I will give you the money, and you will pay off the money, the loan also, but I will charge you interest. Say, okay, fine, yeah, sure. You're giving me 4% interest on my deposit. You can charge me 4%. He said, no, sir. I will not charge you 4%. I will charge you 6%.
because the bank needs profit.
Yes, the bank needs to take profit. So bankers, they keep your deposit and give you interest, which is less than the
The amount
interest they charge they charge from the people who come to take loans, right? So
And that's how banks make profit, right?
Right.
It's through charging.
let us take the story of banks further. What do the banks do with the deposit which they accept from the public? There is an interest mechanism at work here. Banks keep only a small portion of their deposits as cash with themselves. For example, banks in India these days hold about 15% of their deposits as cash. This is a liquidity that they maintain. That whatever money they get from depositors for their deposit, so they keep only 15% of that cash with them, because if they want to go and withdraw some money every week, every 10 days, then they can give them the cash should be there. The rest of the money they are not keeping with themselves. This is kept as provision. 15% money that they keep with them, this is kept as provision to pay the depositors who might come to withdraw money from the bank on any given day. Right? So since on any particular day only some of its many depositors come to withdraw cash, the bank is able to manage this cash.
Yes.
Okay. Banks use the major portion of the deposits to extend loans. So 85% of the deposits that they have, they use it for giving loans to others. There is a huge demand for loans for various economic activities. Like you said, economic activity. Someone wants to start a business. Someone wants to do farming. Someone wants to buy a tractor for cultivating land, and
Someone wants to buy a car. Someone wants to
Hmm.
invest in real estate,
Right.
and stocks,
Yes,
etc.
or for education, or for some medical treatment, or something else. Someone's getting married, and all these things. So a lot of economic activities are there. So people need loan for economic activity. So we shall read more about this in the following section. Banks make use of the deposits to meet the loan requirements of the people. Okay,
Yes.
people have loan requirements. Myra, who is going to meet that requirement? People have loan requirements. Who can meet our requirements?
अशोक पापा कनेक्शन थोड़ा कट रहा है.
Oh, can you hear me now? Can you hear me?
The internet's right here.
Oh,
So
I think the time is up. Or what?
no. It's not.
You-
There's unlimited. It's unlimited. Can you
Oh.
hear us now?
Can you hear us, Myra?
Hmm.
Okay. So banks make banks make the use of deposits to meet the loan requirements of people. People have loan requirements. We have loan requirements when we buy a house. We took a loan. I bought a car, so I took loan from bank. So these requirements, the loan requirements, were met by a bank. The bank helped me in getting the loan. Yes. So in this way, banks mediate between those who have surplus funds and those who are in need of funds. So people who are depositors, when we have excess fund, when we have excess money, we keep our excess salary in the bank. So, and people who need funds, who are borrowers, they take this money that we put in the bank. Banks charge a higher interest rate on loans, right?
They offer on deposits.
Then they offer on deposits. You understand, Myra? Yes. So when we are depositing money, the bank is giving us 4% interest on the money that we are depositing. But when I will go to take loan from the bank will charge me 6% interest, will charge me more. So the bank is charging higher rate of interest on loans and giving lesser rate of interest on deposits. Do you see this difference? So the rate of interest is higher on deposits or on loans?
On loans.
Correct. So the difference between what is charged from borrowers and what is paid to depositors is their main source of income, right? So what is the main source of income for banks? It is the difference between the interest that they charge from borrowers and the interest that they pay to the depositors.
So that 2% is the profit that they make.
Yeah, I mean, actually, when they give interest, when they charge interest on loans, it is up to 14%.
Yeah, but I'm talking about the example
Yes,
you gave
yes,
us.
yes, yes. So, what do you think would happen if all the depositors went to ask for their money at the same
The
time?
bank's gone, bro.
The bank they're going to just
Tata, bye bye, salam alaikum.
they're just going to pack up their tables.
Exactly.
So people make deposits. Do you see? People are coming.
Yes.
So many of them are coming. All of them are putting their money here, and they withdraw some money. But when they withdraw money, so many people are not there.
Less people.
Less people are there.
Hmm.
And people are coming to take loans. Fewer people are coming to take loans, and people repay loans with interest. When they're paying loan, they pay loan with interest.
So basically, yeah, I think another way to explain this is kind of cool. People, they put their deposits. Their deposit go to people with loans. People who they repay their deposit with interest, and then comes back with withdrawal and interest.
This is one way of saying it, but the thing is that the bank is maintaining 15% of their deposits for them to take away.
Yeah.
So, I mean, it is not really dependent on whether these
Yeah.
people are paying or not. So,
Yeah.
a bank has to maintain that thing.
Yeah.
Okay. So, two different types of credit situations. Credit. What do you mean by credit?
Credit is
Credit is the same as loan.
I see.
Credit, when you take credit, means you're taking loan.
Yes.
Okay. Credit and loan is the same thing.
That's the credit card, right? Like you use it to buy whatever you want, and
Yes.
you just pay at the end of the month.
And that's why we call it credit card. That means that money is not deducted from your account as soon as you buy something using your credit card, which is also called plastic money. So you buy in advance, and there is a designated date. In my case, which is 26th of every month. So if I pay by the 26th of every month, whatever I have bought through the month, they are not going to charge any, penalty on that. Otherwise, they charge me. They call it profit. Otherwise, they charge some profit on that.
So
Yeah. So two different credit situations. There are two types of loans.
Yes.
There are two types of loans that we can take. A large number of transactions in our day-to-day activities involve credit in some form or other. Are you able to hear me clearly, Myra?
Yeah.
Okay. So credit loan credit, or as you can see in the bracket, it's written loan, which means credit and loan is the same thing. Credit or loan refers to an agreement in which the lender supplies the borrower with money, goods or services in return to the promise of future payment. Right? So the lender, he is supplying the borrower money or goods or services, right? And you are promising to pay that person in future. So let us see how credit works through the following two examples. Here are two examples. One is during the festival season. It is festival season 2 months from now, and the shoe manufacturer Salim has received an order from a large trader in town for 3,000 pairs of shoes to be delivered in the time. The festival season is coming, Diwali is coming, Eid is coming, and this person says, around Eid, I'm going to sell a lot of shoes. There is going to be, a demand. Sorry, he actually received an order for from a large. So before Eid, a trader, he gives him an order. He says, okay, bhai sahab, please make 3,000 shoes for me. I'll pay you when you deliver the shoes. So he has to make the shoes, 3,000 pairs. 3,000 is a lot of pairs of
6,000 shoes.
Yes. So to complete the production on time, Salim has to hire a few more workers. He can't do it alone. Okay, he's very lucky to have found this order, but he cannot do it alone. He is going to hire some workers for stitching and pasting work. Okay, he has to purchase a raw material also. What is the raw material they need for shoes?
Leather
Okay,
and cloth and sometimes rubber as well.
okay. To meet these expenses, Salim obtains loans from two sources. First, he asks the leather supplier to supply leather. Okay, now and promises to pay him later. So first is that he is telling the supplier to give him leather, and he says, "I will pay you
Later.
after 1 month or so."
Yeah.
Second, after 2 months. Secondly, he obtains loan in cash from the large trader as advance payment for 1,000 pairs. So this person who has given him the order for 3,000 pairs, he says, I, uh, "I will pay you for 3,000 pairs after 2 months when you deliver." He says, "No, no, no, sir. Pay me for 1,000 now, and for the balance 2,000 pairs after 2 months, because I need to buy raw material and pay to the workers also." Okay.
And he says that I will deliver the shoes to you with the end of the month.
Yes. Okay. So he takes advance payment for 1,000 pairs from this trader, with the promise to deliver the whole order by the end of the month. So he is not delivering now. He is
Saying that I
He is
will deliver.
promising.
Yes.
You see, it is a promise. Here it says, what is credit? Credit or loan refers to an agreement with which lender supplies the borrower. So here two lenders. Who are the two lenders here?
The supplier.
Why don't you tell Myra who are the two lenders here?
The supplier,
Who is the supplier?
the leather supplier.
Very good. And the other one?
The other one is the large trader.
Correct. So credit loan refers to an agreement with in which the lender supplier. So there are two lenders here. Number one is a leather supplier. He's one lender, and the other lender is the last trader. So they supply the borrower with money. In the first case, he's supplying the buyer with the borrower with leather, right? And in the second case, he's supplying this thing with
he's supplying who? Sorry, wait, can you
the,
repeat
the,
the
the,
question?
the lender.
Yes.
The lender is supplying the borrower with leather in the first
Yes,
case.
and the second time he's supplying with money
For how much?
for 1,000 pairs
1,000
of shoes
1,000 pairs of shoes.
that he
Yes.
can buy raw material.
In return, and what is Salim doing? What is Salim giving in return? For now, he is only promising to pay in the future.
Yes, he promises the leather supplier to pay for the leather and promises to deliver the whole
Correct.
order to the end.
This is very nice. This is a very nice thing. Okay, the leather guy, the leather supplier says, okay, fine, you take the leather, don't pay now. After 2 months, you can pay me when your shoes are sold. And the lender and the trader says, okay, fine, I'm paying you for 1,000 pairs now. And at the end of the month, Salim is able to deliver the order, make a good profit, and repay the money that he had borrowed. So the money he borrowed, money he took loan, the currency, the credit, and he took credit, and he took loan, and what happened? Ultimately, he makes a lot of profit, and he pays back the loan also.
Yes.
Any problem with that? No problem. Now, in this case, Salim obtains credit to meet the working capital. What is working capital?
Working capital is the capital that's in our hands, such as resources which are used in production.
Yes. So you see, here's a small definition given here. Working capital is the capital of a business which is used in its day-to-day trading operations. And it is calculated as a current asset minus the current liabilities. So you don't need to go into the technicalities. Working capital. Salim needed credit or loan for working capital. Working capital means the money that he needs to for his day-to-day activities. Are you getting me, Myra?
Hmm?
You getting me? What is working capital?
Yeah.
So working capital is the capital of a business which is used in its day-to-day trading operations.
Such as in hand and raw materials.
Okay, yes. So for buying leather, for paying money to his workers, so he needed credit to meet his working capital needs of production. The credit helps him to meet the ongoing expenses of production. complete production on time, and thereby increase his earnings. So loan helped him in becoming richer, right?
Yes.
Credit therefore plays a vital and positive role in this situation. Now we see another situation. Swapna also needs money. Swapna's problem. So Swapna, she is a small farmer. She grows groundnuts and she has only 3 acres of land. How much?
3 acres.
3.
3 acres of land. She takes a loan from the money lender. She's not taking it from the bank or any place. She is taking the loan from the money lender to meet the expenses of cultivation. So expenses for cultivation is also called work, working capital,
Yes.
right? Can we call it working capital, Myra? Maya, are you able to hear me?
अच्छा पापा आपकी आवाज फिर से कट कट कर आ रही है.
Oh my God. Are you able to hear me now?
Better, पर इतना नहीं.
क्या बताएं? Anyways, if you miss something, you ask a question because we can hear you clearly.
Okay.
Okay. So Swapna, she grows groundnuts, and she has a small land only, 3 acres of land. Now she has to grow groundnuts, and for cultivation expenses, which is her working capital expenses, she needs money. So she takes the loan from the money lender. Who is a money lender? Money lender is a person who is giving money, in the villages, and their job is just to pay the money.
Yeah. Give money.
So they give money to the people, to small farmers and all these people, and they charge interest on that. Usually they charge heavy interest on that. Okay. So she takes a loan from the money lender to meet the expenses of cultivation, and she is hoping that her harvest will be very good and she'll be able to repay the loan. The harvest will be good. She will sell the groundnuts and she'll pay off the loan. Okay. Now, midway through the season, the crop is hit by pest. What is pest?
Yes.
Myra?
Something that destroys your
Yeah.
crop.
Yeah. It's like
Insects.
locusts
Yes.
and
Yeah.
grasshoppers, locusts. So crop is hit by pests and the crop fails. So through Swapna, so though Swapna sprays, she also used very expensive pesticide to kill the pest, but it doesn't help. The crop fails. When the crop fails, she has taken the loan from the money lender. She has to pay back the loan by selling the crop. And the crop is failed. How is she going to pay off the loan? She can't. She's unable to repay the money lender, and the debt grows over the year into a large amount. Okay. He's still charging interest. He's still charging interest every month. She doesn't pay the interest, adding to it, to the principal amount. Principal amount is the amount that she has, added. She has actually borrowed. So the next year, Swapna takes a fresh loan. She takes another loan for cultivation. Now the next year,
Also,
it is a normal crop year. This year, the pests are not there. The crop doesn't fail, but the earnings are not enough to cover the old loan. Also, she just makes enough money to pay the loan for that year, for that 1 year. She's got in a debt.
and she'll have to keep on taking more and more things for
Yeah.
every year that she cultivates.
Yes,
So
she has to sell a part. Now what happens? Now because she cannot pay off the whole loan, she is caught in debt. And to pay off the loan, she doesn't have enough crop to sell. So what she does, she sells off the part of her land to pay the debt. She already had only 3 acres of land. Now she has to pay. She has to sell off. So what is this? This is a kind of a debt trap. Say debt trap.
vicious cycle.
Yes, debt trap. Even her real her asset, which is the land, 3 acre of land, even that goes. So even if the season is very good, the cultivation is very good, the crop is very good, she is now cultivating in a smaller part of the land, right?
So her profits will not be as much as.
Yeah, she will not be making enough money. Myra, if you get
Mm.
tired, you can let me know. Okay, we will stop and maybe cover the rest tomorrow. So we can continue for now.
We can?
I'm saying, can we continue for now? Or
Yeah.
are you tired?
Can I go?
No, I'm not.
Huh? Are you tired?
No.
Okay. So we saw these two cases of Salim and Swapna. So in one case, in Salim's case, the credit helped him in becoming more successful, more profitable. And in Swapna's case, credit actually made her poorer. Am I right?
Yeah.
Okay. So in rural areas, the main demand for credit is for crop production. They're not buying cars, they're not buying houses, they're not buying Xbox, they're not buying stuff like that. They are they need credit for crop production. So crop production involves considerable cost. What what do they need to buy? They need to buy seeds, fertilizers, pesticide, water, electricity, repair of equipment, and all these things. There is a minimum stretch of 3 to 4 months between the time when the farmers buy these inputs and when they sell the crop. This is also called gestation period, where you invest money. Gestation period. It's not a part of your thing, but I'm just letting you know. Gestation period is the time that is required to reap your profit. You invest now, you start processing, you start selling, then you start getting something that is called gestation. So there is a minimum stretch of 3 to 4 months between the time when the farmers buy these inputs and when they sell the crop. So farmers usually take crop loans at the beginning of the season and repay the loan afterwards. So what happens? They take loan in the beginning of the season and they can pay only after the harvest. They can sell off the seed. So repayment of the loan is crucially dependent on the income from farming. Like if the income is not happening, if the crop fails, then you'll be in trouble. Yes. Okay. In Swapna's case, this is what happened. Failure of the crop made loan repayment impossible. She had to go to the land to pay the loan. Okay. So credit, instead of helping Sapna improve improve her earnings, left her worse off. This is an example of what is commonly called debt trap. Okay. Myra, you understand debt trap? Myra, can you? No, she cannot hear me.
अरे पापा आप कुछ कह रहे हैं क्या?
Are you able to hear me or not?
या मतलब इतना अच्छे से नहीं, बीच बीच में जैसे जब आप लाइन बोलते हैं तो कट हो जाता है, पर
Oh my God.
ठीक है बस.
Oh. So do you understand? So what I'm saying is, debt trap समझ में आया तुमको?
Yeah.
Can you explain what is debt trap?
Debt trap is something that when a farmer, poor farmer,
बताओ.
yeah, okay, when Swapna, wait, yeah, so when Swapna, she like borrowed money from the money lender, but because of the pest, her crop was not successful and she couldn't get the money to pay the lender. So like when months pass, the interest increases and therefore she is unable to pay the debt and she falls in debt trap.
Hmm. Okay, yes. So she can pay the loan, she can pay off the loan only from the earnings from her crop. But because the crop failed, she cannot pay the loan. Am I more clear to you now?
Yeah.
So Rayan has given me a mic. So I think you'll be able to hear me
Hmm.
more now.
या माइक की वजह से बहुत क्लियर आ रही है आवाज.
ओहो, ज्यादा क्लियर तो नहीं है. ओके, ज्यादा क्लियर है, थोड़ा कम करूं.
नहीं ठीक है एकदम.
Okay. Okay. So credit in this case pushes the borrower into a situation from which recovery is very painful in case of Swapna. So in one situation, credit helps to increase earnings. Which situation? Whose situation?
Salim's
And therefore the person is better off than before. In another situation, whose situation?
Swapna's.
Swapna's. Because of the failure of crop, credit pushes the person Swapna into a debt trap. To repay her loan, she has to sell the portion of her land. It's certainly much worse off than before. Whether credit would be useful or not, therefore, depends on the risk in the situation, that whether there is some support in the case of loss. So, agar risk hai, so whether credit would be useful or not. If the if there is risk, what kind of risk?
Of money.
Risk of crop failing or any kind of risk. For example, if I ask my for 1,000 rupees from her ED money, will you give me?
Sure.
Okay. Now my question is, why will you give me money? Why will you give me 1,000 rupees from me ED money? I'm taking a loan.
Because yeah.
Yes.
Well, because you need it.
Yeah, because okay, I need it. Okay, even if I don't pay you back, you'll say, okay, fine, he's my relative. Let me pay him. I'm saying that, but imagine if someone very poor comes and he says, excuse me, please give me 50,000 rupees. I will pay you next week. So you'll say, oh my God, why do you need 50,000 rupees? Oh, actually, someone is getting married in my house. So you'll say, oh my God, I will not give you 50,000, but I want to help you, so I'll give you 5,000 for now. Why are you giving 5,000? Because you see, even if I lose 5,000, I'm okay with it. Yes, it's not. You are risking only 5,000 rupees. You're not risking 50,000, and you'll be willing to give me 1,000 rupees because you know that I get my salary, I have enough money, I can pay you back, right?
Yeah.
So credit, whether credit would be useful or not, therefore depends on the risk. Are you getting it? It depends on the risk in the situation and whether there is some support in the case of loss. If there is a support, what kind of support can you have? You can tell the person that all these things you see. Okay, what is the background of the person? How much salary he has? How many assets he has? How many people are there to support him? Is he on his own? Does he have a regular income? And to actually safeguard everything, you say, okay, my friend, I'm not going into whether you will pay me or not. I'm not going whether you have stable income or not. I am saying you're taking 50,000 rupees from me. Okay, fine. But before you take the money, you leave your bike, which is for 75,000 rupees, and leave it with me. You say you will pay next week. Okay, fine. You bring back the money and take back your bike. If you don't bring the money, the bike is mine.
Sort of like posting a bond.
Yeah. Yes, it's a mortgage. Yes. So let's work these out. Fill the following table. Why did they need credit, Salim and Swapna? Salim needs
For fulfilling his needs.
yes for yeah.
And also for paying the loan which he took.
Yes. So Salim needed credit for his working capital for buying leather and to pay for his workers. Swapna, she wanted to cultivate groundnut.
Hmm.
It's okay, I don't need. And what was the risk? In Salim's case,
In Salim's case,
the risk was not much. I
He
mean,
would lose it much.
yeah,
yeah. In Sapna's case, the pest could make the
yeah,
crop fail. And what was the outcome? The outcome was Salim became a richer person and Swapna was
while
worse.
Swapna.
Supposing Salim continues to get order from traders, what would be his position after 6 years? Will he be a rich man or a poor man?
He would be pretty rich, I guess.
Right, right,
Obviously, because
yes,
he would be getting more money.
right. And what are the reasons that makes Swapna's situation so risky? Yes, why did her thing become risky?
Well, because first of all, we don't know about if the pest will come or not first that,
Hmm,
and then
hmm.
in Swapna's case, it was pest only. It could be like weather changes also.
Yes. So not only that, even Sapna has only 3 acres of land. She's not a very rich
Yeah.
person. She's poor. She's not a rich person. She's poor. So it is. I mean, a person who thinks that there will not be a possibility of getting back the money from her will not pay her, right? Okay.
Hmm.
And discuss factors, pesticides, role of money lenders and climate. So pesticides, we need pesticides for killing the pests. Hmm, hmm, hmm,
That's also a thing. She doesn't have to pay much more than if she took a loan for the bank. And
right.
climate, obviously, it all depends on whether her crop fails or succeeds,
Hmm,
right? So
hmm, hmm,
that's also
hmm,
this.
hmm, hmm. Okay. So this is about loans. Two different types of credit situations. We saw one credit situation, the person benefited. The other credit situation, she was worst off. Okay. Now terms of credit. What do you mean by terms? Terms and conditions means what are the terms that you will pay you're willing to give the credit on. Okay. You say, like I told you, one term is leave your bike here and take away the money. If you come back with the money after 1 week, you will take away your bike. You pay with interest. If you don't, the bike is mine. So terms of credit. Every loan agreement specifies an interest rate which the borrower must pay to the lender along with the repayment of the principal amount. Principal amount is like 50,000 rupees the person wanted. So 50,000 is the principal amount. And if you charge any interest on that, that is principal plus interest, right? You're getting me, Myra? Now,
Yeah.
in addition, lenders may demand collateral, collateral securities. Like collateral was the bike.
The bike was a collateral,
Yes, the bike is a collateral. Your salary slip is a collateral. Your assets are collateral. Any documents that say that you have so much of property, a house, this, that, everything is a collateral, right? So collateral, what is collateral? It is an asset that the borrower owns, such as land, building, vehicle, livestock, deposits with banks. All these are collateral. So basically, collaterals are kind of a safeguard or a guarantee that if you are not able to pay off the money, then collateral can be used to buy to get the money from you know the person. You leave
Hmm.
the bike with that person. The bike is a collateral. The person will sell off the bike, and you will be this thing. Okay. So collateral is an asset. It's an asset, first of all. It's an asset that the borrower owns. What kind of asset? The borrower should own that asset. Land, building, vehicle, livestock, deposits with bank. And uses this as a guarantee to a lender until the loan is repaid. So until the loan is repaid, the collateral will be with the lender, right? So if the borrower fails to repay the loan, the lender has a right to sell the asset or collateral to obtain payment. Is that clear?
Yes.
Yeah.
Property such as land titles. So land titles. Land titles, what are land titles? Land titles are basically, if this used to be there, that if a person has used a land before, and if a person doesn't have a land, but he has been using that land and paying rent on that land over a period of time, then he has some right on it. If a person has been living in a house as a tenant for a very long period of time, then he gets a right on it. So land titling is a form of land reform in which private individuals and families are given formal property rights for land which they have previously occupied informally or used on the basis of customary land tenure. Okay, then providing formal titles increases. So why is this land titles? Because it increases the security of the land tenure and supports development of markets in land and allows better access to credit using land titles as collateral. Okay, so what kind of property can be as a collateral? So properties such as land titles. Why land titles? Because small farmers don't have their own land. Land titles. Okay. Properties such as land titles, deposits with banks, livestock, and some common examples of collateral used for borrowing. Okay, what Mari, you have to go?
नहीं अच्छा वो एक्चुअली बस 10 मिनट्स के लिए जाना है वो नमाज पढ़ने के लिए.
हाँ. ओके, एक काम करते हैं. तो I think कितना हो गया? Can you show me the book? Let us maybe stop here and finish the second one in the next class. कल कर सकते हैं?
कल सैटरडे है ना? कल कर सकते हैं.
तो कल किस टाइम? इसी टाइम?
नहीं.
हाँ?
ना, क्योंकि ट्यूशंस होते हैं.
What did I do?
Stop screen recording. It's fine.
You stop screen recording.
Okay.
No, it's still recording. It's still recording.
Okay. Okay. Can you see? Where's the book? Yes. Okay. So let us stop recording.